Welcome to the Trading Bell Show. I'm your host, Maina Chege, and today we have had the results announcements by NCBA Bank Quarter 3, the first in the world digital lender. And here with me is a CEO to help us understand what is all this about. What are they looking at? What are the projections? John Gachora, welcome to the show.
Thank you, Mr. Chege.
Great to have you here. 18.2 billion profit before tax. Q3 looks good on you. And of course, all the things that I've checked out from your non-funded income, net interest income, all on the positives. I'll be interested to get to know first, as I congratulate you for that performance. What are your quick sentiments and highlights with overall performance this quarter?
Look, we are quite excited about our performance. As you say, 18.2 billion profit before tax, 64% up year over year.
Absolutely.
If you look to the profit after tax, up double, 96%. Hopefully the highest in the market, I believe.
Absolutely.
Of any bank. So we're quite excited. And as you say, if you look at all our lines, non-funded, funded, very good performance across the lines. We've been very deliberate in working with our customers. It's been a tough year for a lot of customers, and so supporting them has been a call that we made early enough in our strategy, that we're here for good, we're here to support our customers. We've done so, and hence the results that are coming through. Also, I should mention that if you look at our results, our subsidiary contribution has gone up significantly compared to where we were last year. I think at the end of last year, our non-Kenyan subsidiaries contributed a loss of 1.5 billion shillings. If you look at today for quarter 3, year to date, our subsidiary contribution outside Kenya, it's pretty much, it's a loss of 100 million, which is pretty much even. So a positive swing from where we were this time last year. Very big positive swing.
I had you speak at length about it, and you're about halfway your strategic cycle and now on full gear implementation from what you said on your sentiments. And I have seen, I think as I was driving past Karatina last year, I was very happy to see the branch there. That tells you I'm a customer, and so I just popped in there and I was feeling very much at home. So you're expanding, and 17 branches since implementation, as you said in the conversation. So over the last 2 years has been quite incredible. What is the rationale for this expansion, and how are the branches performing?
Yeah, so we spend a lot of time with customers, asking them what makes them want to bank with the bank. And what we did was carry a survey in 2019, a very in-depth survey with customers, prospective customers, to ask them what are the key considerations you go through to open a bank account. And top of the line was, do I know where the branch is? And it makes sense. Somebody in Karatina who has never seen a branch of NCBA will not call us and say, I know you have a branch in Nairobi, I want to open an account. So it is for that reason that we decided that because we want to bank all Kenyans, we need to be closer to them. So we have this mantra that at the end of the day, we want to be a walking distance from your wallet. Now, it's true that customers, once they open an account, they may never visit us. We have some of the most sophisticated digital channels and mobile channels, and that is to allow customers to bank at their convenience. But the fact of the matter is, Kenyans always think when things go wrong, I need to know where to go. I can face a human being and tell them this damn thing is
the
not
human
working.
touch.
The human touch. And that is why we're opening branches. But also I should say that what we have done is maybe change the structure and look of our branches. So that whereas traditionally branches were seen as service centers, we're now opening more as sales centers. So we have more salespeople at every branch to bring new customers, because as I say, once they come, we onboard them on our channels, on our mobile channels, they never need to visit our branch again. So that's the change that we have made. So you see fewer tellers, fewer tellers at a branch, but more salespeople and more sales space. That's what we're creating. In terms of performance, we open our branches with a plan to turn them positive after 2 years. So it's a 24-month projection. We are not into 24 months with any of our branches, but already we have 3 of them that have turned positive way ahead of schedule. We have about 5 or 6 that we believe by the end of the year they'll be positive. So we are meeting. I think we are meeting the targets that we set for ourselves. Lastly, I would say is that part of the reason we decided to grow our branches was that we also need to change the mix of our deposits. What you see in Kenya is, except for the old banks, old traditional banks, and maybe the very large banks, the mixture between what we call term deposits and what we call CASA,
Yeah.
current account and savings, tends to be somewhere around 50-50. And to change that ratio is quite difficult. So part of the reason we're doing what we're doing is to try to change this ratio. And we've already seen, looking at the deposits that we're getting through those branches, about 75% of our deposits are CASA. So already we can see they're contributing to a change in our mix ratio.
Wow. And well done on that, by the way. Let's talk about what I want to call the big sector in what I am seeing, first of all, especially on the digital lending portfolio.
Yes.
Quite impressive, quite significant, especially in Marta's short-term lending markets. Talking about M-Shwari and Fuliza.
Yes.
First of all, let me just let the viewers get to know the numbers. Q1, 310 billion, Q2, 423 billion, and Q3, 521.
Yes.
I'm keen to ask, I thought, after your announcement on the reducing of rates, probably there could not be such a significant number, but I'm seeing it still rising. What's driving this?
So after we announced the reduction in pricing, as you recall, we announced reduction in daily rates for Fuliza.
Absolutely.
But we also announced that for the first 3 days, we don't charge you anything. Because you see, Fuliza was founded to be an overdraft.
Yeah.
We're bringing overdrafts to the common Mwananchi. Overdrafts were reserved for the rich.
Yeah.
We're bringing it to the common Mwananchi. It was supposed to resolve that little mile. You were paying for bread.
Yeah.
Bread is 100 shillings. You have, you have
90.
You need 10.
The 10,
Are you going to call at home to tell them, please send me 10? That was what we were trying to resolve. But the idea was that as soon as you buy that bread, you go back and find the 10 and you put it back and you complete the transaction.
Yeah.
So it was a methodology to ensure transactions don't fail.
Wow.
That was the idea.
Yeah.
Obviously, people have started to use it beyond that. Yeah, people realize your school fees to pay, so you can buy yourself a couple of weeks. Yeah, so you use Fuliza to do that. So what we announced was really to bring it back to the original use by saying for the first 3 days it will be free, because we wanted you to use it for those first 3 days. It wasn't supposed to be for the next 2 weeks.
Yeah.
It was supposed to be for those first 3 days. Once we did that, I think Kenyans are very smart, as you know, very financially savvy, and once they realize that really they can use this facility for what it was intended for. Yeah. Since that announcement that we did in September, we have seen 14% growth in utilization of Fuliza. So that number there, 521 digital loans as of end of Q3. We expect that number to grow significantly by the time we announce at the end of the year. And that tells me that structured correctly, structured right, Kenya's financial inclusion agenda is not complete yet, which is why I really support what the government is trying also to do with this financial inclusion fund. Because it means that we have not been able to satisfy the need for credit in this market.
Wow. Let me just stick to the digital lending portfolio. You're on record that the bank is in the process of forming a separate fintech company to host its digital loans platform in Kenya and others in your subsidiaries as well. I would want to know, what is the status? Is it an acceleration or diversification of revenue that you're looking at? If you could mention on that.
Sure. So we announced that we want to take our digital assets, which people know M-Shwari, people know Fuliza, people know Loop, people know Stawi that we had started, and a few others. To package them into a fintech for a number of reasons. One is because we want to expand in a number of countries. And the regime that governs how banks expand and how they get licensed is very different from what governs fintech's expansion. So this is agility of expansion. So that's one. I think the second thing, which is also quite important, is agility of process. How you develop processes, how you bring them to market, again, is different. Again, the licensing regime for that is different. And there are some things you want to try and don't necessarily require a license. As a bank, you cannot try with a customer anything that's not licensed. So again, having a fintech, you have a bit more room to do experiments before you get all the license that you require. So I would say that is one. The second one is better allocation of capital. And for that, what do I mean? When a fintech is within the bank, we look at it in terms of allocation of capital, how we look at traditional banking. It's not the same thing. So this will allow us to see fintech for what it is, allocate capital and investments in a way that is akin to how the fintechs are operating. I'll say lastly, and quite important, is that fintechs have a certain way of valuation that's not the same as traditional banks. We believe that when you hide those assets in a traditional bank, they get valued as though you're a traditional bank. And so us to move it there is to give better valuation, to better view, and therefore better valuation of those assets to our shareholders.
Wow. Let's get back to the numbers, and I'm keen because when I looked at your non-funded income, I think it has the highest shot because it had a 40% up. That's quite significant, 22.5 billion. Yes. And I just looked keenly inward, and I noticed, and today you have alluded to it when you say that you're now the biggest provider of FX in the market.
Yes.
It seems like there's a new trajectory, or there's an opportunity there already that I've seen, because there was quite a huge, significant uptick there and counted big time to the non-funded income. Any comments on that?
Sure. I think, as you say, you'll see that we had very good performance on non-funded income. Absolutely. We've always had very good non-funded income as a bank.
Yeah.
But I think this year particularly, as you say, the performance on our FX portfolio has been fantastic. We reported 9.2 billion contribution from FX. I believe that's the highest in the market. And that, it corresponds to the amount of volume we put in the market in terms of FX. Hence my point about the biggest provider of FX in this market. And I say for really one reason, and one reason only, is that we are strong believers that being a Kenyan bank, wholly owned by Kenyans, we will support this economy every time that we get an opportunity to. And therefore, we have taken a lot of risks to provide FX to ensure that as a country we continue to provide fuel, to import fuel. As a country we continue to have manufacturing working. We continue to bring edible oils and other things that we need for nutrition. And that is why we've continued to be very active in the FX market. That we provide, one, because the quality of customers that we have, that we're able to get FX from our customers. The quality of arrangements that we've made with certain customers to give us FX. But also because we take quite a bit of risk on our own book, given ourselves the balance sheet. We can take larger, what is called net open positions, or uncovered exposure on dollar to give dollars to our customers, to give access to dollars for our customers. And that's what we have done, and we'll continue to support the economy.
Keep up doing that.